Welcome, everybody. Scott Reilly, the Market Update Desk, January 30th, NMLS number 157524. Well, we had the Fed meeting yesterday, and as expected, the Fed kept a pause on the Fed funds rate. Now, what really was looking to move the market was commentary either to the dove side or the hawkish side. We did see a little bit more to the hawkish side with some walkbacks during the Q&A session. Let's kind of go over what Chairman Powell said. And I want to look back specifically on the labor market to his commentary on the December 18th meeting. And in that meeting, he said, since earlier in the year, labor market conditions have generally eased and unemployment rates have moved up but remain low. Now, yesterday, the commentary was the employment rate has stabilized at a low level in recent months and labor market conditions remain solid. But yet we know from the report yesterday from the BLS, where they revised their numbers and looked at actual data, that there were 800,000 jobs in Q2 of last year that were never there. Chairman Powell didn't really address that. So I would definitely disagree with the statement that the labor market has remained or does remain solid. It's interesting that he didn't address that report yesterday, though. In regards to inflation, at the December 18th meeting, what he said is inflation has made progress toward the committee's 2% stated objective, but remains somewhat elevated. Now, yesterday, he indicated that inflation remains somewhat elevated. So he took out the part that we're making progress towards the 2% goal. Now, he explained the tweaks in the language of the statement of the labor market and inflation should not be interpreted as a sign after the comment. So what we're really wondering, did the Fed get a sneak peek at the PCE report that's coming out tomorrow? Logic would tell us that they did get a sneak peek at it, so they took that language out. So that may throw a little bit of a curveball tomorrow, but we are expecting a positive PCE report tomorrow. So we're a little bit concerned about that and on guard. Now, when this language came out and started to be interpreted, mortgage-backed securities hit their 50-day moving average, and that acted as topside resistance. We didn't gain any more ground. And on mortgage bond, 10-year treasuries, we hit off resistance of a very difficult 50-day moving average level. So depending what we get tomorrow, we may get some reversing of these gains that we have had. Now, also yesterday, we did get unemployment numbers today. So initial jobless claims came in less than expected. Also, continuing claims did come in slightly lower. Now, what helped the bond market out in mortgage-backed securities today is the first look at Q4 GDP for 2024. That came in 0.2 less than expected. So that slowing of the GDP growth acted as a benefit or a counterbalance to some of the more hawkish language that Chairman Powell gave. We'll give you, Mr. Gibson is talking over there. He's giving his opinion that he didn't like Chairman Powell's comments about inflation and not addressing the updated BLS numbers report. So that's what Senior Analyst Gibson was talking about. We'll do an early quick report yesterday when PCE comes out, and then do a more updated one breaking everything down tomorrow. Give us a call, 616-293-2189 for your mortgage needs. We're happy to go through the real data that's out there, help advise you on what the market's doing and why right now is a great time to buy. 616-293-2189. Have a great afternoon.